Welcome to the Ontario Mortgage and Real Estate Insights podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host, Steve Hamowen, here to provide you with insights sourced from reputable news outlets to help you stay informed and make well-informed decisions.
This podcast is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their homeownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode.
Today, we're kicking off with a significant legal development in the world of syndicated mortgages. The co-founders of Fortress Real Developments Inc., Jawad Rathor and Vince Petrosa, have been found guilty of fraud in a case that has sent shockwaves through the industry.
It's truly disheartening, Steve. Thousands of investors were misled about the security of their investments. I can only imagine the stress and financial strain this has caused for so many families.
Absolutely, Janine. Justice Daniel Moore's verdict was quite clear. He stated that he was satisfied beyond a reasonable doubt that Fortress misled these investors about the level of security attached to their syndicated mortgage loans.
The fact that over 14,000 individuals invested nearly $920 million is staggering. It shows how much trust people had in Fortress. It's heartbreaking that this trust was breached.
The crux of the case was the misrepresentation of loan-to-value ratios. Fortress based these ratios on projected future property values instead of current appraisals. This omission was deemed a non-disclosure of material facts by the court.
Such a technical detail, yet it makes a world of difference. It's a reminder of how crucial transparency is in financial dealings, especially when it involves people's hard-earned money.
Justice Moore pointed out that Rathor and Petrosa were very smart and sophisticated businessmen. Their model might have succeeded if they had used as-is values. Instead, their decision to mislead investors was found to be intentional.
And now both men plan to appeal the decision. It's going to be interesting to see how this unfolds. I hope justice is served and that investors can find some form of restitution.
The trial, which began last October, initially included charges related to secret commissions, but those were dropped. The focus narrowed to two real estate projects, Sky City in Winnipeg and the Collier Centre in Barrie, Ontario.
It's a complex case, Steve, and it highlights the risks involved in syndicated mortgages. It's a call for investors to be more vigilant and for the industry to enforce stricter regulations to prevent such incidents.
Let's dive into a key issue affecting many Canadians right now. We're seeing a troubling trend where more Canadians are missing their mortgage payments. This development is occurring as the Bank of Canada prepares for an upcoming interest rate announcement, juggling between a slowing economy and rising inflation.
It's a tough situation, Steve. Many families are feeling the pinch as they struggle to keep up with their debt payments, including mortgages. An Equifax analysis has shown a significant increase in the severe delinquency rate for mortgage debt in Ontario, which rose to 0.24% in the first quarter of this year. That's a 72% increase compared to the same period last year.
Indeed, Janine. This rise in delinquencies highlights the financial stress that many Canadians are under. The Bank of Canada has held the headline interest rate steady at 2.75% since April, but questions remain about whether they'll address the slowing economy or tackle inflation first.
And as we know, Steve, retirees are also feeling the impact. Many are trying to sell their family cottages to help fund their retirement. However, they're facing a buyer's market, meaning they might have to accept lower offers or wait until the market improves.
Absolutely, Janine. It's a challenging time for sellers in cottage country. Real estate agents advise retirees to price their cottages realistically and invest in quality marketing, such as photography and staging, to make a good first impression. It's essential for them to be strategic in this market.
On another note, Steve, we're also seeing a shift in the Toronto area housing market. Many investors who bought properties during the pandemic are now renting them out instead of selling. They're hoping to recoup costs and perhaps benefit from future market appreciation.
That's a smart move, Janine. While selling might not yield the desired returns right now, Renting out properties provides a way to generate income and wait for the market to potentially rebound. It's a strategic play in an uncertain market. Let's turn our attention to the ongoing condo crisis in Toronto, which is raising eyebrows across the country. The Greater Toronto Area is facing a significant downturn in its condo market, with demand and prices both on the decline. This situation is causing concern about whether similar issues could arise in other Canadian markets.
It's quite alarming, Steve. The condo market in Toronto has been hit hard by a drop in renter demand for investor-owned properties. This, combined with rising interest rates, has turned many of these condos into cash flow negative investments. It's a tough spot for owners who find themselves unable to cover their costs through rental income alone.
Absolutely, Janine. The crux of the issue seems to be a mismatch between the costs of owning these condos and the rental income they can generate. Economist Charles St. Arnaud from Alberta Central points out that the situation is exacerbated by demographic changes, including a projected fall in immigration numbers due to government policies capping international students and temporary foreign workers.
And that's a significant factor, Steve. Many of these non-permanent residents are renters, and with fewer of them around, the demand for rental properties is likely to decrease further. This could indeed put pressure on condo markets in other cities that also rely heavily on rental demand.
St. Arnaud suggests that other cities like Vancouver and Calgary could also face similar headwinds. The increase in purpose-built rental units is adding to the supply, which is already putting downward pressure on rents. This makes it less attractive for investors to purchase condos for rental purposes, potentially leading to market corrections.
It's a challenging scenario, Steve. For those who bought condos with the intention to rent them out, the reality is setting in that rents might not cover their costs. This situation isn't just limited to Toronto. It's something we might see ripple through other major cities.
Another layer to this complex issue is the economic outlook for Ontario. The province has been hit hard by external factors like tariffs, which have led to significant job losses. St. Arnaud notes that Toronto is at the epicenter of the national housing market cooldown, and the big question is whether this economic slowdown will remain localized or spread to other provinces.
It's a valid concern, Steve. The real estate market is inherently local, but broader economic trends can influence buyer confidence. If economic conditions worsen in Ontario, it could dampen the housing markets in other regions too.
Indeed, Janine. While each market operates within its own dynamics, the underlying economic conditions can have a cascading effect. It's crucial for potential buyers and investors to stay informed and consider these factors when making decisions. Now let's shift gears to some promising economic news from the first quarter of 2025. Canada's economy grew at an impressive annualized rate of 2.2%, surpassing many economists' expectations. This growth matches the pace seen in the last quarter of 2024, with real GDP rising 0.5% on a quarterly basis.
That's right, Steve. It's encouraging to see such resilience in the economy, especially given the ongoing challenges like tariffs and global trade uncertainties. The growth was largely driven by a 1.6% increase in total exports and a buildup of business non-farm inventories.
Absolutely, Janine. However, it's important to note that residential investment took a hit, with a 2.8% decline in the first quarter. This was due to a significant drop in ownership transfer costs, which is a key indicator of resale market activity. It's the steepest decline since the first quarter of 2022.
Yes, Steve. And while the final domestic demand remained flat, it's interesting to see how business investment grew by 4.0% annually, despite the uncertainties. This shows a level of confidence among businesses to continue investing in the Canadian economy.
Indeed, Janine. This stronger than expected economic performance is influencing expectations around the Bank of Canada's interest rate decisions. With the economy holding up well, the likelihood of a rate cut in the near term has diminished. Financial markets are already adjusting to this outlook.
That's right, Steve. While some economists had anticipated a rate cut, the recent data suggests the Bank of Canada may hold off for now. The Canadian dollar has edged higher, and bond yields have remained steady, reflecting this sentiment.
Economists like Douglas Porter from BMO have noted that while the composition of growth wasn't particularly strong, the overall resilience provides the central bank with more time to assess the data. They're now looking at a possible rate cut in late July instead of next week.
It's a cautious approach, Steve, but given the broader economic context, it might be the prudent path. As always, keeping an eye on these developments is crucial for anyone involved in the mortgage and real estate markets.
Absolutely, Janine. It's important for our listeners to stay informed about these economic indicators as they can have a significant impact on mortgage rates and housing market trends. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your home ownership goals. Catch you next time, and stay informed with the latest industry insights.